Bitcoin, Ethereum, and crypto-related stocks are on the move higher this morning, days after President Trump signed the Genius Act into law, making the first major piece of crypto regulation. Here with more on where crypto goes next is Brady Dale, Axios crypto reporter. So that was the sort of landmark, Brady, that people in the industry pointed to, the first big legislative win for them. I think there are a lot of questions now about what that unleashes, like what happens now in terms of tangible products, changes to the industry. What are you watching most closely?
Yeah, the thing I'm most interested in is if consumers actually start to adopt stablecoins. It's tough to get people to adopt new ways of payments here in the US. But if they do, it could be really good for small businesses, retail, which all have a very narrow margin. Stablecoins give them a way to have a digital version of actual cash we keep in our pocket. And the reason cash is nice for retailers is because it doesn't come with those interchange fees that credit cards have. Well, stablecoins would be pretty much the same. And so I think we'll see merchants starting to urge people to adopt stablecoins, but who knows if they do.
Well, and I mean, don't we have a digital version of cash already, which is just cash, right? Like Venmo and things, there are ways obviously to transact online without credit cards, I guess just not that many. So would this in theory make all of that easier?
Yeah, it would make it all easier. It would make it all faster. You don't have to have a third party involved. And, zooming out from that, Venmo doesn't work internationally.
Right.
You can't pay people abroad with it. So there's a bunch of other, more boring in the weeds sort of businessy things that we'll see folks use stable coins for. But in terms of like just the average person on the street, the thing I'm curious about is if, normal American consumers start to use it.
And what are we seeing in terms of the industry sort of preparing for that or trying to push that forward?
Well, I mean, the crypto industry itself has been all in on stablecoins for a long time. A lot of them call it the first killer app of blockchains. I think the thing that I'm curious about is, the industry is going to try to own this space. Circle, Tether, they're going to try to be the Microsoft and Apples of the stablecoins future. But the thing is, a bunch of the big banks like Bank of America, Citi, all of them are also talking about getting into the stablecoin game. And of course, they have a lot more access to a lot more people more immediately, and they're more trusted names. And so I think it's not so much what the industry does, the existing blockchain industry, as it is like the banking industry. How do they get into it?
You also recently wrote about some incentives that the industry is sort of offering or poised to offer in terms of things like cash back when people use stablecoins. I can't help but think of the BlockFi situation when I see things like that, where they were offering interest on crypto deposits. It didn't end well for the folks who were doing that. So now, with that in mind, how does the industry sort of convince people that this is not a risky situation?
So where the more conservative interest that you see on apps like Coinbase and PayPal, where you can deposit stablecoins and get 3 or 4%, I think it's closer to 4% these days in return, where that comes from is just from U.S. Treasuries. The problem with BlockFi is it was making all these very risky loans to hedge funds and things like that, and nobody knew that's what they were doing. And that is, it was a lot riskier, right? But these high percentage rates, that definitely beat your savings account, that like Coinbase and PayPal are getting on stable coins, that's just U.S. Treasury returns. That's all it is. And so it's extremely safe. And stable coins, they don't lend the money out like banks do. So it's all there. It's 100% backed.
But do they then make anything from it?
Well, so yeah, it's a great question. So the reason why like Coinbase and PayPal are giving basically all the interest to users is because they're trying to get people to start using their coin. So yeah, like their margins at that point are really tiny. It's also not that hard of a business once you've got people in the door. You put the money in the bank, you turn it into treasuries, it makes a return, you spread it around to your users. That doesn't take a lot of people to do it. But yeah, that is going to heavily shave into their margins. Their theory is if they can make their stablecoin popular, they'll be able to build more businesses on it down the road.
Right. So we've been talking all about the Genius Act and what came from that. What about the Clarity Act? Where is it now, and what is that poised to do?
Yeah, great question. So the Clarity Act started in the House. That's the bill that would sort of regulate the whole world of cryptocurrency. So, for anyone who's been even mildly following this topic the last several years, this question of what are these things, who regulates them, all that stuff has been up in the air for as long as I've been covering this stuff, which is like 8 years now. And so the Clarity Act will nail all that down. And so the House passed it last week, and it is now before the Senate. We expect the Senate to put out its own kind of draft language this week. There'll be some negotiation around that. And President Trump has said he wants the law finalized and on his desk by the end of September. So that's the state of play. If that bill passes, crypto won't be the quote unquote Wild West anymore. There will be new updated rules that actually reflect how this technology works.
And speaking of Wild West, maybe, we had the latest company this morning talking about a Bitcoin treasury investment, and this time it was DJT, Trump Media, which is not surprising, right, given the Trump himself and the family involvement here. But what do you make of this trend that we have seen of all these companies, jumping on the crypto treasury bandwagon?
Well, there's two kinds, right? So for folks who are thinking, is this good or bad for my portfolio? If it's a company that is making some money, they've got some extra profit, they aren't immediately sure what to do with it, so they buy some Bitcoin in the meantime. That's kind of the block model. Then there's not much concern about it. Bitcoin could go down, but it's been doing pretty well over time. The dicier thing is there's a bunch of companies coming along that are actually, their whole thing is just buying Bitcoin, and they're buying it on leverage. And so that obviously gets a lot riskier. And if that bet starts to unwind, it's going to cause a lot of sales of Bitcoin really fast, which won't just hurt that company, it'll hurt the whole Bitcoin market. So we could be kind of stacking up risk with those companies. But if a company's just buying a little Bitcoin on the side, it's no big deal. And I think that's more the model that Trump is doing right now. And like I said, companies like Block or Tesla, which also have some Bitcoin.
And Brady, finally, we're covering a lot of ground here. Finally, I want to ask you about Polymarket, because Polymarket got the go-ahead from the DOJ to re-enter the U.S. market. Bloomberg is reporting this morning that they're buying a derivatives exchange that is not very well known called QCX, and that's how it's going to get back into the U.S. What do people need to know about Polymarket, which is sort of crypto betting platform, versus maybe some of the other betting platforms that are out there?
Yeah, so Polymarket is a market that uses blockchain technology, but it's not an exchange for trading like Bitcoin and Ethereum and things like that. Polymarket is a market for making bets on real world events. They call it a prediction market. And the theory is here that people who have real information, who don't want to tell it to the world, kind of put that information into the market by making bets. And so this was something that we all got very interested in during the last presidential election. It looked like Polymarket was right when the rest of the world was wrong. And it's like any kind of betting. If folks are thinking about starting to play around with this, don't put in more money than you can afford to lose. But it is sort of a new category of financial product that sort of lets you let you settle some of those conversations you have around the bar with money on the line in kind of a fun way, if that's what you want to do.
Yes, we'll keep an eye on that closing of that acquisition to see when it actually re-enters. Brady, thank you so much. Really appreciate it.
Thanks for having me.
Well, cryptocurrency assets topping $4 trillion in market cap for the first time, or roughly 7% of the S&P 500's market cap, 13% of total U.S. GDP. My next guest says that could be an interesting signal to watch for markets. Joining me now, Michael O'Rourke, JonesTrading Chief Market Strategist. Hey, Mike, it's good to see you.
Hi, Julie.
So you're a stocks guy, right? But you like to look at tea leaves all over the place to try and figure out what kind of investor sentiment we're seeing here. So the enthusiasm and the growth that we have been seeing in crypto, what does that sort of tell us about animal spirits cross asset?
Well, it's interesting. I mean, I believe in the Warren Buffett tenet that to be an investment, you have to be an income-producing asset. And obviously, these cryptocurrencies are not income-producing assets, so they're speculations. And a lot of people have made fortunes speculating them in recent years. But I do think, when you measure an asset class like this and how big it's become relative to the stock market, it can give you an idea of what the speculative juices flowing out in the markets are. And what I'm seeing here is that at $4 trillion in assets, the collective cryptocurrency market cap is about 7% of that of the S&P 500. And that's a level we reached back in late 2021, right before the equity market peaked. And to be fair, obviously we had interest rates kick in 2022 that weighed on the equity market as well. But it just shows there is a lot of speculation out there in the state.
And so how are we seeing that also in the equity market itself play out?
Well, I mean, it's interesting. We have the S&P 500's market cap to GDP here is 185%, which is a new record. In the 2000 bubble, we peaked at 120%. And if you add in the cryptocurrencies, or if you take the entire U.S. market, U.S. equity market cap, which is the Russell 3000, you're at about 230% of GDP. So this is, it's an expensive tape. There's a lot of excitement out there. Obviously, we have potential headwinds coming up in a couple of weeks, or Friday of next week, with the new tariffs theoretically kicking in. So it's just a really interesting environment out there that people don't seem to be worried about risk.
And so what are the vulnerabilities then, I would ask? Like, it sounds like you think things are kind of delicate at these levels, or toppy potentially at these levels. What are then the top contenders to poke holes in what's been going on?
Well, I think the biggest problem we're going to face is August 1st with these new tariffs, in the sense that they are pretty much the same as the April 2nd tariffs. In some cases, they're worse. So if that does come to fruition, I think markets will be surprised and shocked. I think everyone is conditioned to think the president won't follow through. So I think that's a larger concern. And when you come back to this cryptocurrency story, you just had the previous segment about these treasury companies. That's been the big theme the past couple of months. And the interesting aspect of that is all these companies are selling equity in order to buy the cryptocurrencies. So you're definitely seeing people favor, or I guess it's more speculation in that market, and they're willing to sell equities. The companies are selling stock to the public in order to finance the purchases of the crypto assets. It just makes it a really interesting dynamic here.
And it sounds like you're skeptical of that dynamic, that things could go wrong.
Well, I just don't understand if you believe in cryptocurrencies, and like obviously the tenet behind Bitcoin is that there's a limited amount that can be created. I don't know why you'd invest in an equity company that's going to continually sell stock in order to pursue this business model. So you're taking away that key quality that you liked about Bitcoin, and you're putting yourself at risk for perpetual equity sales and diluting yourself. So it doesn't make a lot of sense to me, but obviously there's a lot of people excited about it, and there's a lot of people doing it.
And more broadly in the markets right now, I mean, obviously we keep sort of pushing up towards new highs here, Mike. As we were talking about earlier in the show, economic data has been beating estimates, right? So it seems like there is a bull case to be made here for stocks potentially to go higher. What do you think of that side?
I think the segment you did earlier about the earnings breakdown between the Mag 7 and the other 493 is the most interesting part. I do think there's many attractive names in the other 493, and you're seeing that Mag 7 earnings growth really start to decelerate. And the reality is that Mag 7 earnings growth has really been driven by NVIDIA, which obviously with its $4 trillion market cap itself has already priced in a lot of optimism and a lot of future growth. So I don't want to say there's definitely opportunities for long investing out there. The problem is the Mag 7 collectively has become so expensive that it's made the S&P 500 itself expensive. But whereas if you look at the single stock level within the S&P 500, there's a lot of high quality blue chip names out there that investors can look at, and their valuations are attractive to where they've been relative to where they've been the past 5 years.
Let's turn to the cryptocurrency markets. Ether, the second largest cryptocurrency by market cap after Bitcoin, recently hit its highest level since January. It's up 60% over the past month. Joining me now with a closer look at what's driving this momentum is our senior markets reporter, Ines Ferré. So what's going on there?
So, Julie, there's a lot of enthusiasm around Ethereum right now. And this is not just because ETH or Ether is going to be going up in price, but because companies have this bullishness about the entire infrastructure, the network, so to speak, as the financial services industry converges with the crypto world. So what do I mean by that? Is that what analysts are telling me is, look, you are now have the ability to tokenize real world assets. And that can be anything. That can be gold, that can be currencies, as we've seen also with stablecoin, for example. It can be art, it can be real estate. And those tokens can be stored and moved on the Ethereum blockchain. So the reason why we've seen such a surge in Ethereum recently, really over the last month, we've seen it up more than 60%, is because of this bullishness around the architecture, the infrastructure, the financial layer, so to speak, or the financial network infrastructure around all of the innovation that's happening in the digital space and when it comes to financial services. So many stable coins run on Ethereum, and we saw a huge surge after the Genius Act was passed. And you also have companies like the miner, for example, BitMine, which went public on June 5th, on the same day that Circle went public as well. And they have now acquired more than $500 million of Ethereum. So that's a pure play on Ethereum. Now, this does not replace this Bitcoin strategy. And you have companies like Strategy, for example, Michael Saylor's Strategy, and he has said he does not plan to buy Ether. His bet is on Bitcoin. Bitcoin is the one that he sees as the commodity, as valuable. But as far as other companies are concerned, they're very much betting on this infrastructure, the network behind this convergence of the financial services and the crypto world.
And sticking with Bitcoin and the sort of Bitcoin treasury on a lot of corporate balance sheets, Trump Media, the latest one that is jumping into that pool, Ines.
Yeah, that's right. So Trump Media now holding $2 billion in Bitcoin and Bitcoin-related securities. And these holdings are making up now 2/3 of the company's $3 billion in liquid assets. So this just goes to show you this push from companies to go towards holding Bitcoin on their balance sheets. Still a huge, Bitcoin is in the #1 cryptocurrency in the world by market cap. And DJT, though, I do want to add, is there is a difference when you look at these companies that are acquiring Bitcoin. Some companies are acting more like meme-like type of stocks when this happens, and other companies like Strategy, for example, is up 40% year to date. But if you take a look at DJT stock, it is down about 45% year to date. So just because companies acquire Bitcoin doesn't necessarily mean that the investor reaction to that is the same as you would see when a company like, for example, Strategy acquires it.
Yeah, if nothing else, Strategy seems to have sort of a first mover advantage in that way as the company that sort of pioneered that strategy, Ines. So it's been interesting to watch. Thanks so much. Appreciate it.